Hi, I'm Hubert Centers. Welcome to Absolute Wealth's weekly edition of Centers Strategies. Let's take a look at this week's strategy.
In this week's strategy, it's all about fear, and it's all about the rise in gold prices. You can see Rome concerns, rolling gold market. And then if you flip over here to Bloomberg, you can see the same type of headlines. Gold rallies as stocks and the Italian bond market retreat. So what we're going to do is we're going to talk about a strategy to enter gold to make potentially your trading gold a little bit more profitable. It's the same analogy that you use for airplanes. All right, so takeoffs are optional, but landings are mandatory. Now, since takeoffs are optional, what we want to do is we want to save ourselves some money on the entry. All right, so let's take a look at gold really quick and talk about a couple strategies that we can use to increase our entries. All right, so we're looking at a daily chart of gold. Before we move into the intraday chart, we first want to see where the broad technical analysis is on the gold market. So I'm going to use my handy dandy electronic pencil here, and I'm going to draw some things on the chart and kind of highlight them for you. So top, so here we have a double top, all right? And then we sold off pretty hard, okay? Then we had a squeeze. This just means it's consolidating, and then it's going to expand to the downside. This means it's consolidating, and it's going to expand to the high side. Now, in this period of time where you've got this nice range-bound move on gold from about 1,600 to about 1,700, so about a 100-point move right in here. Not a whole lot you could have done about this, and we've been on the sidelines for a while. Now, as soon as you break out of this Darvas box, that's a good potential long signal. So, potential long here. Now, usually a retrace from point 1 to point 2 will naturally retrace into a 50% zone, which is right here, 50%. We call this the ambush, A-M-B-U-S-H, the ambush zone. And usually this is where you look to sell after you've had a sell-off, a retracement. You look to short this area and roll back over. If it closes above this red line, then you change from bearish to bullish, which is where you're at now. So the next target that we want to target on a long signal, since we've got a long here and we've got long up in this area and long up in this area, the next target we're going to use is 1827. So right now we're trading at 1791. So we've got, some still potential in order to go a little higher on gold. And then we'll start talking about testing this high of, 1918, this double top. So now what we're going to do is we're going to drill down. You can either use a 1 minute or a 2 minute chart, and we're going to look for volume spikes. Now, when I do this strategy, I usually use a 1 minute chart, and this is what I've got right now. I've got a 1 minute chart, of GC, the big gold contract. You see this big volume spike here? It's usually an exhaustion. So in other words, that could potentially be the high run on gold. And right now, gold's up 35 points. $35.10 right now is how much gold is positively up on the day. Anytime you see that volume spike, that's usually an exhaustion point. So you can see here's another one. Volume spike, exhaustion, pulled back and tested a high and then pulled back again, right? Now it went ultimately higher, but it's a good place to fade. In other words, take the other side of the position. So now what we're going to do, we are going to scale up to a 15-minute chart, so we will just condense some of the time. So what I want to do is I want to point out to you volume spikes. See these volume spikes? And then when you see this, what? That's the run is pretty much already taken place. Volume spike, kind of weird. Volume spikes, the up move has taken place. All right, now that's up move, sideways, up move. All right, so what you're going to look for over the next couple days is you're looking for this. Now you see what I'm talking about here. So on gold, when you're looking for volume spikes, if you think it's going higher on a swing basis over the next several days, several weeks, then anytime you get a sell-off in gold with a volume spike, it's your job to pick that up, okay? A sell-off, volume spike, you get long there, and we already talked about your target. So the rally in gold is back. You need to get long some gold. Do it on an intraday basis. When you see a volume spike on a sell-off or a sell-off and then a volume spike, either will work, and then use your target as that target that we discussed before. Good luck. Hope it helps. See you next week.